On this week's episode of 0 to 100 Effects, I'm going to show you some of the lessons I learned while taking these trades, of which I got losses in all of them. Almost all the time I'm posting, I'm getting losses, man. This is becoming tiring. But hey, we're not giving up. So join me in this episode as I show you what happened, what I did wrong, and what I think I would have done better. So welcome guys to another episode of 0 to 100 Effects. I lost some money on this one. I had put a risk to reward of 1:2.41. Although I got a loss in this one, I realized something. First of all, this was a counter trend trade. As you can look in the 4-hour time frame, you can see that price is making higher highs and higher lows, but I decided to try and take this counter trend trade because if you come back to the 30-minute time frame, you can clearly see that price reached a point where it swept on liquidity on this left side, so I was expecting it to go lower. I was expecting price to go lower and sweep on liquidity so that it can climb high. I didn't see the fact that around here there's a greater area of resistance, so it would have been better to actually put the trade around up here, of which it will be a better trade. And in this case, I would have even had a higher risk to reward ratio of about 1:2.73. That is a very nice trade for me. But the main lesson that I got from this trade is that, first of all, if you are going to counter trend in any trade, just be sure and you need to have more surety, unless you're trading in the lower time frames, but you need to have more assurance that price is going to go lower or higher, countering the trend. A lot of areas, the thing that can give you assurance is confluences, especially strong confluences, like maybe areas of resistance, like maybe prices at a area where it's rejected more than once or twice previously. Yeah, that's a pretty sure area. And make sure that there's been a liquidity grab or sweep so that you can be more sure. Anyway, that was it for this. Going back to gold. In gold, I missed a very beautiful trade right here that I was waiting for, just because I was waiting for the extremely perfect moment. Just so you know, guys, you can never get the perfect moment. It will never align with, okay, not never necessarily, but it won't always align with your confluences, all of them. So sometimes it's better to take the risk. Just like you can see here, I had placed an area I had marked out this area around here where there's liquidity, so I was expecting price to go lower. After sweeping, I was expecting price to go all the way to this next level around here where there's a fair value gap. So once it taps on the fair value gap, I was expecting it now to go all the way higher. So my trade looked something like this. This was supposed to be my trade up to around here. I would have taken partials around here and the trade would have ended around here. But I lost on this trade because of one reason. I expected perfectism, but either way, you should also learn to stick to your area. If you missed out on it, it's okay, you missed out on it as long as you are sticking to your trading plan always. As much as I missed on this trade, just by a flicker, just by literally some few pips here, it will have been a nice trade, and at least on the bright side, I know it will have run out very well and I would have taken profit from this trade. But anyway, you live, you learn. So this week I haven't taken many trades. It's been a slow week for me. praying for a better week next week. Thank you guys. It's been real as always. Keep on keeping on. We're moving higher and higher day by day. Consistency is key. The trick is not to stop, but to continue going every day and every day and every day, because you never know when your lucky day will be. So that's it, guys. Take care. Bye.